I like big news, and I cannot lie. You other hodlers can't deny. When Andrew walks in with a big old toothy grin and a ton of news in his hand, you get Crypto Espresso, your teeny tiny daily shot of caffeinated crypto headlines. And yes, it's a lot today, so put on a pot of coffee. First up, Bitcoin's bullish momentum is cooling down as the Federal Reserve prepares to decide whether it'll raise interest rates yet again. An increase of 0.25 percentage points is expected on Wednesday. All of this comes as the Crypto Fear and Greed Index, which measures sentiment among investors, reaches its highest level in a year. But the question on everyone's minds is whether Bitcoin has the potential to crack $30,000. Reaching this level would see MicroStrategy break about even on its investment of 132,500 Bitcoin. Bloomberg intelligence analyst Mike McGlone has claimed the global banking calamity may mark Bitcoin's maturation from its birth following the great financial crisis. Bitcoin has outperformed gold by a factor of 10 times so far this year. Ron DeSantis is not a fan of digital dollars. The Florida governor, who is expected to run for president in 2024, assuming he can survive those harsh browns that Donald Trump is serving him, says that he wants to ban CBDCs from the Sunshine State. Standing before a podium emblazoned with the phrase "Big Brother's digital dollar," he claimed a CBDC would promote government-sanctioned surveillance. DeSantis then pointed to China's digital yuan as an example. His announcement is largely political theater. A digital dollar could still be 10 years away, and the Federal Reserve has expressed deep skepticism about the need for one. Nevertheless, it could be a fatal blow to the movement to create a CBDC in the US. DeSantis is now calling for other states to join his campaign against centralized digital currencies. A former Coinbase executive believes that hyperinflation in the US will drive Bitcoin's price to $1 million within 90 days. And Balaji Srinivasan is prepared to put his money where his mouth is by putting up $1 million in stablecoins against one Bitcoin. If he's wrong, a pseudonymous Twitter personality called James Medlock could turn $28,000 into 7 figures. This whole kerfuffle confused Bloomberg columnist Mike Levine. He tweeted, wait, so a guy is betting that Bitcoin will be at $1 million in 90 days by buying a Bitcoin at $1 million now? Do I have this right? I'm not the world's greatest trader or anything, but if you have $1 million and you think Bitcoin's going to be worth $1 million in 90 days, the trade is to buy 40 of them. Oh, Matt Levine, it's not about being rich, it's about sending a message. Back in November of 2017, the then CEO of Credit Suisse faced a backlash after he dismissed Bitcoin as a bubble. Back then, Bitcoin was trading at $7,000 when Tidjane Thiam declared it had unattractive characteristics. Fast forward 5 years and Bitcoin has had quite the glow up, with some treating it as a safe haven during the current banking crisis, with Credit Suisse being rescued by UBS in a cut price deal. Well, the irony hasn't been lost on Bitcoiners. Blockware's head analyst Joe Burnett wrote, over 5 years ago, the CEO of Credit Suisse called Bitcoin a bubble. And since then, Bitcoin is up 318% and Credit Suisse just sold for 1/5 the size of Dogecoin. For Bitcoiners, it seems like revenge is a dish best served cold. As far as fat-fingered mistakes go, this was, well, it was a big one. Back in May of 2021, Crypto.com accidentally sent $7 million to an Australian couple who was owed a $66 refund. Well, it took the exchange 7 months to notice, and by then the couple had allegedly gone on a spending spree. A court in Melbourne has heard that $2 million of this cash is still missing, amid claims that some of it has gone offshore. Prosecutors fear that Jatinder Singh still has access to this cash and represents an unacceptable flight risk. But a judge has ruled that he can be bailed out when he awaits trial, as long as he surrenders his passport. He's pleaded not guilty to theft and the case will now proceed. His partner, Thevamanogari Manivel, was bailed out last year. A crypto YouTuber has been accused of threatening and harassing a lawyer. Bitboy Crypto has been named in a class action lawsuit that accuses him of promoting FTX without disclosing that he had been paid. But the influencer, whose real name is Ben Armstrong, says that he's never had dealings with SBF's empire. A judge has been told that Bitboy bombarded attorney Adam Moskowitz with endless phone calls, tweets, and emails. It's alleged that the YouTuber called his office 21 times in just 45 minutes, described Moskowitz as a dumb mother flipper, as is tradition on Crypto Espresso, replace flipper with a harder F word, and claimed his home address was being circulated on Reddit. Last night, Bitboy tweeted, Adam Moskowitz and his law team have filed a document saying that I'm threatening them. Holamau! It's not a threat. It's a promise, bud. I'm coming for your license, sir. Relentlessly. You made a mistake, and you will pay for it. Every crypto advert in Belgium will soon need to carry a mandatory warning that says virtual currencies, real risks. The only guarantee in crypto is risk. Regulators say they're taking action after polls showed that 43% of investors have been motivated by a desire to make money quickly. Crypto firms will also need to make sure that their ads are not misleading and perceived advantages aren't given too much prominence. Research by Belgium's Financial Services and Markets Authority also uncovered another interesting statistic. The crypto winter and the dramatic collapse of FTX doesn't appear to have had too much of an impact in perceptions of digital assets. Only 7% said that they will no longer trade virtual currencies as a direct result of the bear market and SBF's empire going bankrupt. Flagstar Bank has successfully bid on Signature Bank's assets, but the deal excludes its $4 billion in deposits from crypto companies. That means it's going to get a lot harder for crypto firms to offer a fiat on-ramp for their customers. It could also create some nasty headaches when they're trying to do basic day-to-day things like payroll. The announcement hasn't gone down well. The Wall Street Journal claims that the FDIC has all but confirmed that it's closed the bank over crypto, and David Marcus, who once led Facebook's doomed DM project, tweeted, "I really hope we will understand how Signature Bank was selectively stripped of its digital assets business before being acquired." Well, North Korea might not have been behind the Euler finance hack after all. On Saturday, those responsible sent 3,000 ETH, worth about $5.4 million, back to the DeFi protocol, and yesterday the hackers sent a message that said, "We want to make this easy on all those affected. No intention of keeping what is not ours. Setting up secure communication, let us come to an agreement." Euler had initially tried to appeal to the hacker by saying they could keep $20 million and avoid prosecution if they returned the rest. But that offer doesn't necessarily mean all that much. Mango Markets had reached a similar agreement with Avraham Eisenberg, but he was slapped with charges by federal prosecutors anyway. And finally, for a little while anyway, it looked like FTX's new management team and the Bahamas were playing nice. But not anymore, those gloves are off. In a new filing that's bound to inflame tensions, executives from the exchange have asked a judge to kick Bahamian regulators off the bankruptcy case. Their attorneys argued that the company's Bahamian unit, FTX Digital Markets, FTX-DM, has no ownership interest in property of FTX, Alameda Research, or any of the approximately 100 companies in Sam Bankman-Fried's empire. Bankman-Fried and FTX's offices were in the Bahamas, and he was arrested there at the request of the US Justice Department. But it's claimed that these offices functioned as an offshore haven for a continuous fraudulent scheme. And speaking of continuous, this episode of Crypto Espresso, which just seemed to keep on going and going and going. Show your appreciation for my voice's sacrifice by liking this video, subscribing to our YouTube channel, and clicking on that little bell icon to get buzzed whenever a new Crypto Espresso video goes live. What'd you think about today's episode? Well, maybe there's comments today. There were no comments yesterday, so I have no idea what's going on with comments. Anyway, if you can leave a comment, just do it. Just leave a comment. If you can't, I don't know, save it. Save it for the next time we have comments. Questions about our headlines or crypto in general? Take a dive to that section below and ask Alex. Alex is always a great resource for all things Web3 and the metaverse. And that about does it for today, for our extra large episode of Crypto Espresso. Again, I've been your host, Andrew. These have been your headlines, and we'll see all of your beautiful shining faces tomorrow.